What's up, Outliers? Happy Tuesday. I got us at 1700 Pacific time, so it is time to kick things off and see how everybody's doing. So today, I kind of have like a open agenda. I don't have a laundry list of stuff to go through. I am building some materials that I want to work through with the Outlier Pro members tomorrow, but it's not ready yet. I'm specifically looking at a couple rotations in strategy that I'm working through right now. So one of them really is I kind of started getting the moves that I wanted from TQQs. So at this point, I'm rotating over into something that I want to kind of maintain longer term, kind of like a trending style position at this point. So with something like this, specifically with TQQs, what I like to do is obviously when I see opportunities for trend following, I'll use it because if you get a persistent trend in a singular direction, it really can amplify returns pretty massively. Now, for longer term maintenance of a position, there's absolutely nothing wrong with holding TQQs, but it's not tax advantaged. So that is the primary reason why I look to rotate after I get the move. I mean, like I'll pay taxes on this move. I don't care. But in this case, I've essentially taken a few entries. So I started scaling in on the 25th here, and then I scaled all the way into the 6th here. So I essentially bought all the way through here. And now it's time to manage the position. So as I'm managing the position, I'm working on what I want to use for kind of the NASDAQ replacement. So that is that's what we'll talk about a little more tomorrow. There's a couple things I'm looking at, but at this point, it'll probably be futures, but I'll work through a little more specifically what it actually looks like. But I'll probably trade either the NASDAQ or probably the mini NASDAQ futures. The NASDAQ futures themselves are fine, but I really like trading more things similar to like a ratio diagonal, which you can do really well with futures. You obviously trade the base futures contract for your Delta One product, and then you can sell options against your futures, which is again kind of standard fare for the holding. And the trading something like the mini NASDAQ gives me a little more control over precise sizing. So this is kind of part of the core allocation of the portfolio, and it'll fit in with something similar to kind of like a E-mini position, whether I stick with E-minis or the micros on that side as well. I don't know yet. I need to see. I have a couple like big transactions coming up for the portfolio. So I kind of just need to see what money I'm going to have left, because all of my money is slowly going away. And like I told the folks in the Patreon, sooner or later, you guys are just going to see me behind a Wendy's dumpster. So that's just how it goes out here. It looks like we got Tanner in for the ride. Elong Songs is here. David, Captain, Chris, Gabe, and Rutabaga. We got the whole show in town. Great to see everybody. I am exhausted by getting these Europe. Are you guys getting these right now from wherever you live? I keep getting these Your Opinion Matters research polls. I literally delete every single one and report it as junk, and I still get tons of them. It is the most annoying thing. It drives me crazy. Super annoying. I don't want to give you my opinion. Stop texting me. And whoever gave you my number, fuck them too. Big not fan. Roaring Clitty's here. I'll hit you up at the Wendy's dumpster. I appreciate that. That's kind of anybody that's willing to help support the enterprise. It's very, very much appreciated, and I accept your condolences. So thank you guys. Captain Chris says, hope you had a nice vacation. Yeah, dude, it was incredible. The whole thing with the sciatica is a little bit of a bummer because it definitely did impact some of the stuff I could do, but I'm still so thankful that we were able to go and kind of check out a bunch of it. At the in writ large, it was awesome. Super, super big fan. And like I've told everybody, I've already gone through like some of the photos and stuff, but Alaska was it really was even more beautiful than I expected. We thought it was going to be cool, but I don't think either of us thought that it was going to be quite as cool as it was. And I mean, it was absolutely stunning. I just finished going through like making my drone video that I typically try to make. And I was watching the drone video back, and yeah, just absolutely cool. There's some really, really cool high points of the trip. We'll see how long the sitting lasts. I give it maybe 5 minutes. I feel like 5 minutes is pretty good for a sit. You know, we're in the rebuilding phase. All right. So what's going on in the markets? First off, anything that we want to take a look at, let me know. Gabe says, have you seen Drunken Miller's 13F? Lots of COHR. I haven't. If you have a link to it, either drop it in the Discord or shoot me an email with the 13F and we can take a look through it together. Here's my email. Trading.io. If you want to shoot me an email with the 13F, Gabe, I'll pull it up and we can look through it together because I always enjoy poking through those. That sounds fun. Colonel says, did you know ASTS vol? So ASTS has been a funny one. And this is, I already talked about this trade a little bit. And this, it's still something I'll continue to follow. It's more so just trend following at this point. But yeah, the volume is essentially what I would expect it to be honest, because it's still continuing to expand. It's accelerating up and out. The down day is lighter volume, which is good. So yeah, I mean, overall, the volume here doesn't surprise me at all. It looks essentially right on target for something like this. That's kind of having this kind of move post earnings. Obviously, the bigger part of the move was during earnings. So yeah. Short interest was high for ASTS. I thought it was only like 15%. Is that wrong? ASTS current short interest. 17%. So if it's 17%, I don't really care. Fintel says 19%. That's also one of the annoying things, honestly, with these kinds of metrics is that you can never find like just what it is. You always get a bunch of this other nonsense. ASTS. Let's see what it is here. Yeah, this says 17.78% on Benzinga. So, I mean, that's not that high. That's high enough that it does start to get a little interesting, but I don't think it's like, that's not massively interesting to me. Growing says, do you expect short interest to be higher for small cap? I don't necessarily think it's like just for small caps, but to your point, like smaller products will have a shorter interest as a percentage of float no matter what. So to that end, yes, but I think it really comes down to where people are finding opportunity for overvalued things. So I wouldn't even bucket small cap altogether. I would kind of bifurcate or trifurcate or whatever is after that ficate for small cap going into specific indices, sectors, because that's really what shorting is, right? It's when we think something is overvalued and we want to make money from our perception that the value should contract as it moves closer to whatever the ultimate market value is. That's really the nature of shorting, is when we think something is priced differently than its perceived market value. So with something like this, I think it's easy to find these kinds of opportunities. I don't know what the trend was in here, though. If you guys know, that would be helpful. But I am uncertain what the longer term trend was for their short interest. But like anything 10, 20% is not, it's not crazy. That's a pretty standard short interest. And then for stuff that starts getting, and to be clear though, 20 is on like the high end of that scale. And then once you start getting above 20, that's when it really starts becoming kind of topical. Because when one of the big things that we are interested in short interest for is the potential for a squeeze, and short interest feeds into a potential squeeze if we get some sort of movement that then forces the shorts to go to the open market to start to close and cover out their positions and so on and so forth. So for roaring, I think in general, it's okay to say that short interest as a percentage of shares outstanding to be slightly higher for smaller caps. I think that's completely fair to say. But more importantly, I think it's important to get to like the sectors and subsectors of regions where we're finding individual stocks that just perceivably are just so overvalued. That I think is kind of important. So good question. And then up at the top, Tanner says, can you check out the options trades between 1232 and 37? Today on SPX, we saw 7,000 November 5,400 puts and 3,500 October 5,400 puts sold. Yeah, let's take a look. This will, if it was today, we can use either of these tools. Let's take a look here. Let's get rid of that. And then let's grab SPX. And then let's go down here and take a look at the options data. Okay. So I see the 5,000, 15 Nov, 5,400. Let's sort these by quantity. $7,000 November 5,400 puts. There's 5. There's 6. I don't know if maybe we'll have to look at unusual whales to see what you're seeing. Because these came in at the mid. These were sold. These were at 9. You said between 12. Yeah. I see them here. 3, 4, 5. Yeah. Okay. So I could see those here, right here. But these are the 5,200s, not the 54s. Where's the rest of the 54s? I see 1,500 sold. Yeah, I don't see the rest of those 54s that you're seeing, but I see the 5,000 of the 54s here, and then I see another 1,000 here. So whether it's 6,000, 7,000, who cares? Same thing. It's a big position, man. So that, I think, especially for something like SPX, if we take a look at SPX, and then let's go back over like the last month, or maybe month to date. We'll do this. One of the things you'll notice for SPX is that it moves in big boy sizes. So in this case, you can see that there was 2,100 of the 4,900 calls that moved for a total of $140 million. And then 1,800 of the 4,900 calls that moved for $115 million. So one of the things that you have to know about a product like this up front is that really, really big players are using it. And big sizes in here is kind of like the norm. So you have to scale your perception of size when you're looking at this. So in this case, if we have 7,850 times, let's call it 6,000, it's a $47 million trade. So believe it or not, this is a small trade compared to kind of the standard big trades, right? It falls kind of in this upper middle range. I don't want to say small. That's kind of dismissive. I don't mean it that way. But it's kind of like in this range. These are big trades. And these aren't even as big as the trades get in something like this. SPX, like if we look at year to date, just for, actually, I think, yeah, okay. I was curious if it had a year to date selection, but it didn't look like it does. But let's just take a look year to date and sort it by size. So a lot of the big trades that you'll find in here are going to be like 80 million, 90 million, 100 million, kind of like double the size of what we're looking at with the $40 million trades. So to me, I always take those as big institutions positioning. Like those are the only people that are trading at that size with this kind of product. So I think, yeah, I think when I see it, it's something I'll pay attention to, but that move in and of itself isn't quite like supremely anomalous to me. I'm actually curious if we look at GameStop while we're in here. This one we saw go through. Here, I think this was this the cat? I don't remember. No, because I don't remember when he first posted. It was before this, and he also wasn't trading that far out. That's not him. I forgot, because he was also buying in like, oh, let's sort this by size. Confused. Very confused. What's going on here? Am I filtering by something? No. No. Single leg, yep. Yep. Ah, Hadi expired. Oh no, it's off. What the hell? I'm super confused right now. Yeah, exactly. Tanner, you're looking at the exact thing I am. I'm super confused right now. You got to go to May. I did. So, Jonathan, this is going year to date. So they should be in here. Tanner says, I thought it was on year to date. Yeah, I am. That's what the hell? Because the other thing is that they're the biggest blocks that we've had, right? Compared to this, at least. So it's not like they wouldn't make the cut of the 250 results per page, because I'm sorting it by size. Did he come in at the mid price? I think I already unticked that. No, he didn't come in at the mid. Yo, I'm so confused right now. Maybe we'll tighten this up. Maybe we'll do like April. And now I was honestly just doing this out of curiosity to. That's disheartening. I don't like that, because for me, it makes me now like have reservations about the accuracy, because this doesn't make sense at all. Oh, this is frustrating. Oh, okay. Well, I'm not going to waste your time with this. I'll take a look at it. I'll take a look at it and see what I can find. But that's just weird. I don't. Yeah, I don't know what to make of it yet. But I have no idea why those wouldn't be in here. That just doesn't make sense to me at all. That's so strange. Let me try. Do we know the dates specifically? Because one of the problems is I have a way more accurate data source, I think. But the problem is I can't scan for it like this. It's a little more specific. So I would need like the specific dates, or at least like much closer to, because I have to download all of the data, which I have it all. Well, in this case, I would just have to query it, but 517 to 24. That's super helpful. Thank you. Dude, what is this? Okay. Yeah, I'll take a look at it and see what I find. It'll take me a little bit longer, so I'll download it though, and then we'll see. So you said the 17th to the 24th. 17 May. I'm just going to check a couple really fast to see if I can find those sizes. Okay, so 17 May, sorted by contracts. I don't see them. Yeah, I don't see them here yet. Let's try. Dude, this, what the fuck is happening right now? This is like Twilight Zone. There we go. Here they are. Here they are. So I see them starting on 20 May. So on 20 May, I see 2 blocks of 5,000 that went through at 3:49 and 3:50 Eastern Standard. So right at the end of the day, which is that's honestly, when you're typically trading, that's a pro move to wait until the end of the day, especially if you're buying. And then I see for the 20s some other bigger contracts, but I definitely see 2 blocks of 5,000 on the 20th. And then let's just check the 21st. So then let's just see if it's maybe something weird with like the number of returns. They're here. Yo. This is so confusing. That's so confusing. Why would they be here? Oh my God, what the hell? What is this? All right. So now let's try to do like the 20th and the 21st. Okay. So then I see them. Okay. So then let's try doing like the 13th to the 24th. Okay. I see them. So then where's the cutoff? When does it say you can no longer see them? See them there. Okay. So now let's try doing the 1st of May until August 20th. They're gone. So it's something to do with the near term. So it definitely has something to do with when you go too far forward. So we'll try the 1st of May. And then let's go to the beginning of July. Riddle me this. What the hell? How does this make any sense? The 1st of May, let's try the 2nd of July. What? Dude, the 1st of May, maybe to the 30th of July. Or June, sorry. Okay. So then the 1st of May until the end of July, the last day of July. Some of them start going away. They're gone now. Dude, that's so frustrating. Transaction must be greater than 25,000. Yep. Yeah, so this all is good. All of this would still be hit. That's confusing. That's super, super confusing. That's also kind of frustrating, to be honest, because one of the things I'll shoot them an email and I'll let them know, because actually, like that's kind of a, I don't want to say it's a massive problem, but like that's a big problem. Rutavegas says maybe hide the expired switch doesn't work. Maybe that is it. But again, it wouldn't, I don't think it would solve it. But that's a great troubleshooting. Let's take a look. Let's do the 1st of May. When, I forgot when they expire. So let's just do May for the beginning, because I don't remember. They expire 21 June. So you might be onto it. So let's try the 1st of May, and let's try to go to the 28th of June. Because if it's based on the expiration, let's see. It's not. Because I can see that it still shows me negative 61 DTE, and I can see all the trades. So it's not based on expiration. Great guess, though. I mean, that was a really, really fair. Captain Chris says, why are we checking these? It started out of just pure curiosity. We started looking at SPX, and then I wanted to see for GameStop if there had been larger contract trades than what the cat did. So it was more out of sheer curiosity to begin. But then as we were looking at it, obviously, depending on when you popped in the chat or popped on the video, we started finding some really messed up returns on the data. Because, yeah, for depending on how much you saw, I don't want to waste everybody's time with too much of it. But for me, I care a lot about this stuff, honestly, to know. Because when I look at something like this, especially if I'm using the tool, I absolutely want to make sure that I'm fully understanding like what I'm looking at. So yeah, in this case, like there's clearly some sort of issue with this. So I'm going to literally shoot them an email right now. So quick heads up, the filtering on, what tab are we on? This is option flow or options data, flow feed. Flow feed is not working properly for GME. If I search and sort by size, it misses a bunch of trades for May unless I select specific timeframes that otherwise should return. Cool. Well, I'll let them know. One of the reasons, again, why I do this is because, like, if it's a tool that I'm affiliated with in any way, I would never want to put you guys onto something that's broken, right? So part of it is also that. All right, so let's take a look at these Drunken Miller trades. So COHR is, wow. So this has gone up pretty massively. So he's at 64 positions, 2.8 bill. Wow, 42%. So he really is scaling into this bit, like pretty massively. So it's up to 9% of the portfolio. That's kind of nuts. See, these guys always make me really interested when I see them doing stuff like this, where they have positions that are less than like 0.25% of the portfolio. I don't actually even know why they bother with that. It just seems like a bit of a waste of time. Maybe it's just like a pure gross dollar asymmetric play that they're thinking of, but I don't totally see why they do this. But they did add a massive position in COHR. Let's take a look at that. That's a great call out. Let's take a look at COHR. And I want to see when they're filing, when they were buying, because it looks like we can see a pretty decent amount of volume. Time to stand. So I see the 13G up top here. Interesting. I'm going to take a look on here as well. So right now, I just want to see if there's other people participating with him. So from an insider perspective, it looks like there's people unwinding a bit. That's curious. Their president is actually unwinding pretty significant sizing. Holy shit. This dude just unwound like almost 50% of his position. And their CEO, the president, has been unwinding like not insignificant sizes. So 415 there, 10, 3. Like, I actually don't love that. That's really, really interesting that there's that kind of behavior. But let's take a look now at COHR here. And then this, I don't care about those. Look at that. Yeah, man, it just like dumped for a while. And this is crazy. All right, let's see what these guys are doing. So it looks like Dodge and Cox unwound a bit, actually a lot of bit. Invesco, still a big position. I don't know, man. Like this to me looks hella mixed bag. I wouldn't say that this immediately is like super bearish or anything like that, but like this does look, yeah, it doesn't look great. Interesting. So how did it do on earnings? Had a good earnings. 457 estimate, 61. And then it had a gap up. Like, that's not bad. Take care, Tanner. Good to see you. So that's not bad at all. That's a really interesting move. That just seems like very mixed bag to me. More so than I would expect. But it looks like from a general ratings and valuation standpoint, it doesn't look bad. Right? So like when I look at this compared to its competitors, it has a way better, well, not way better, but moderately better EBITDA. PE is nothing. It doesn't look bad. Yeah, I mean, it doesn't look bad to me. I'm just surprised to see the insider movement like that, though. That's really interesting. I mean, the way that I look at something like this is it doesn't look bad, but it also isn't something that I would be necessarily like jumping to put my money into. The way I start to look at it is if it starts to get above the recent high, then I become a little more interested. And then I just use the high as the downside. So it would be a really highly speculative trade if I could use high a couple more times in a sentence. So Rutabaga says insiders are behind on child support payments. Apparently they need some damn money. Not like the insiders that we found from Nvidia who are making hundreds of millions of dollars by selling very small portions of their stock. Very different scenario going on here where Coherent, apparently they need a couple bucks. I mean, this kind of movement has been essentially what the Nasdaq has been doing. So if I look at QQQ, right, it's not, QQQ hasn't made it back up closer to highs like COHR has, but if you take a look at the shape of this movement, that's essentially what it is. It's like a higher beta version of Nasdaq. This is looking at it grotesquely from like a broader just portfolio perspective, right? So this went from 81 down to 52 and a half. So this had like a 30 point drop, something like that. And then, so it looks like just a higher beta variant. I'm actually curious what the beta is now. Yeah, 4. Well, this is against the S&P 500, but it's high beta is essentially what I see here. And there is a premium actually associated with that. That's technically one of the hard alphas that you can, well, hard edges, I should say, that you can get from the market. But it is higher beta. So you are just going to see bigger movement all around. So not all too surprising, but an interesting find. Like this one is just generally intriguing to me. This does look like something that could be set up for post-earnings announcement drift though, like for sure. So something that goes from, that has larger than expected earnings per share, right? So it has a gap in that. And then the stock price respects it with a follow-on gap. That's actually really effective for the follow-on quarter to drift in the same direction. You can also drift to the downside, but most of the time we're kind of referring to drifting to the upside. So an interesting find here. So let's take a look at some scans. I haven't done that for a little while with you guys, and this is just a way for me to look for some opportunities. So I'm going to start with kind of a past things that are up the highest percentage over the previous year. So I'm going to start with looking to the downside. So I'm going to look at stuff that's down 50% or more over the last 52 weeks. So you can see all of these are down a ton. And this gives me two ideas. The first one is I just want to get a sense of what sectors are struggling. And again, this is a smaller portion of the universe because I'm looking at things with options. And then I'm looking at things that have weekly options. And the reason is because I'm looking for stuff to trade. Because right now, when I look at my portfolio, I am 135% allocated, 132% utilized, but that utilization is in two contexts. The first one is that includes box spreads. And the second context is I've guided the portfolio value down already based on the conversation we were having at the beginning of the stream because of the property that I'm looking to acquire. So I'm essentially already starting to siphon that out of the portfolio, even though it's still in the portfolio, but I'm starting to kind of sequester it so that when it's time to move the funds, they're ready to go. I found, especially when you're involved in like multiple time frame deals and multiple assets, it's actually really, really important to do that, because if you don't do that, then you find yourself potentially being at a point in time where you have to, grab the money for the deal that you're trying to get in on, and then it's just tied up in something that you can't access. So I start making the adjustment early so that there's absolutely, no impact to the time frame. Right now we're drinking our mango orange, which is still my favorite. If you guys have any other really good Spindrift flavors, let me know. But mango orange is still the top for me. So looking here, these are always interesting to me. The ones that I find that are essentially making big, massive drawdowns, but are above 50-day MAs. So if we grab a chart here, well, you can kind of see why, because it's been trending sideways for an eternity. So this kind of product here is great typically for variance risk premiums, if you can find like a good entry time frame. Implied volatility percentile is low. Like this one in and of itself doesn't look great to me. Yeah, it doesn't look great, but this is one of the conditions that I typically will look for some variance risk premium plays for sure. So something like that. And then let's take a look at BITI. Let's see. Similar story, right? So things that have been trending sideways for this period of time, I definitely lean towards various risk premium plays. This one is still like on a short-term time frame, very juiced up. 0.38, so 38%. Well, you can't really frame it that way, but 0.38 VRP on a 1 day is fantastic. So on a shorter term time frame, this is like really offering. What happened here on the 5th? Something weird happened on the 5th. I don't know what. But the problem with something like this, now with Bitcoin being where it is, I think you can trade something like this more so to either fit, again, like I would just trade vol in this. I wouldn't trade it directionally, but you can also use products like this to offset some of the risk if you have other cryptocurrency holdings that you like, but you want to scrub some of the risk. But this is actually kind of cool to see how range bound this has become. And the reason why that's cool is because then if we take a look at Bitcoin, we can see that it's not necessarily going as crazy as it has historically. I don't love that it's drifting down, but that's whatever. I just like to see that it's starting to become a little bit more range bound, because if we're going to take this with any kind of seriousness that this is, you know, supposed to be some sort of currency, that is a really tough argument for something that just essentially halves in price in these kinds of time frames. So yeah, just kind of a general random note when it comes to things like this. But for the scan, there's a ton of interesting little things like that. Robert says, new at options trading. That's awesome. Welcome. Been studying videos for the past few months. On 2 August, I put on a first diagonal, IWM 19 SEP 25, 185 call, and then you sold to open 30 or the 30 AUG 24s. And then you go on to say, nervous about volatility in IWM and Fed on Friday. Am I justified or nervous beginner? No, I mean, there's whether or not you're nervous is up to you. But what I can tell you is that if you're nervous, it probably tells me that you're missized. Like that's what I would guess, because the origin of being nervous in something is not too revolutionary, but we're uncomfortable, and there's generally a reason why we're uncomfortable. So if we're uncomfortable that we might lose, that's one element of discomfort. But there's probably, in this case, I would imagine a broader element, and I am just estimating that your size probably is not appropriate for you if you feel that kind of way. The other thing is, if you feel like you don't have a plan or you don't know what you're going to do, that's another source of being nervous. Nervousness really starts to shed off when you kind of have an idea of what you're going to do. And it doesn't really matter what the market does because you know what you're going to do. So even for a bunch of trades that I have on that may or may not make money, I don't actually care that much because I know in the aggregate they will make money. But more importantly than that, for the overwhelming majority of them, I kind of know what I'm going to do. So there's not like this question mark like, oh, what if this happens? Well, it doesn't really matter what it is that happens because, again, back to Exhibit A, I already know what I'm going to do. So to me, I think the nervousness probably stems from a few different places. I think you're accurately identifying it from the elements of being a beginner and not feeling confident. I'm not sure how long you paper traded or if you did before you put on a real trade. But if you didn't, that would also make me more nervous for sure, because that's kind of like if you entered a mixed martial arts tournament and you didn't train and you just entered the tournament and you're just going into it, right? Like if you contrast that to somebody that before they go into their first competition, they train for 6 months and they get their feet under them. They kind of have an idea for like a feel for the energy, for how this whole thing works. That person still probably be nervous, but they'll probably be way less nervous than the person who did zero training and then just kind of decided to go do the thing, especially if they care about the outcome. If you don't care about the outcome, then obviously not super nervous. So yeah, I see a lot of small things with that, and I'm not exactly sure what directly applies to you, but hopefully that gives you a couple ideas on what I would guess the source of the nervousness is. And the main thing I would offer for anybody that's new to options trading in general is just start with paper trading for, it doesn't even have to be an eternity, just a few months. And I'm actually going to make a video. I'll make a new note on that actually about like paper trading, because I genuinely feel like it's probably the most misunderstood and underutilized tool available to all traders. So yeah, a couple thoughts for you there. Alfonso says, wondering if you feel that the upcoming election in November will have a bullish impact on the major indices post-election due to decreased uncertainty. Depends on who wins. Depends entirely on who wins. So the not getting into politics, because I don't really care. The part that I do care about, though, is the impact to markets. And if Kamala wins, that is overwhelmingly likely to have a different impact on the market than if Trump wins. Just is what it is. It's literally just based on the policies that they've verbalized that they would support or not support. So I would view massively the variance to be less so because the election is known, and probably much more so dependent on who wins. That's my guess. It could be, and I honestly wouldn't hate if I was completely wrong. And regardless of who wins, if it was just kind of all good, like that would be kind of sick, to be honest. But I just don't see that right now. I just don't see that being the case. And I think the other thing is we have to acknowledge the fact that depending on who wins, there's a chance that the cabinet that they put in place is going to be different. So that also has an impact on the broader market's perception. Because again, remember, markets are discounting mechanisms. So they're going to try to look out in time and to come up with an assessment of what they think is going to happen and discount those cash flows. So yeah. On a side note, it's time for me to get my dinner order ready. And I think we're probably going to go with some barbecue. What are you guys having for dinner? I think for me, barbecue sounds probably what needs to happen in my life tonight. I don't know if technically barbecue, I don't know if people consider that healthy or not. Do we consider barbecue healthy? The Q will make you fat? The Q? What's the Q? Depends on the barbecue sauce. Wait, what does barbecue stand for? Barbecue? You got me confused. Alfonso says, I live in Mexico, so I'm having Mexican food. I had some of that last night. I went with a little bit of Mexican last night. It looks like my barbecue place might be closed, so we're going to have to do a complete audible here. That would be a little bit of a nightmare. Because we tend to eat the same place. Like when we find places that we really like, we tend to run those back. Why can't I reorder this? Damn. That is just a damn shame. Well, there goes that whole plan. The Q, I still don't understand what the Q is in barbecue. You have me super confused right now. I don't really know what that means. What does that mean? Can you explain it to me? But explain it like slow? Maybe with diagrams if you have it. Maybe we'll just do board and brew. Do you guys have board and brew, or is that just a California thing? Board and brew is kind of insanely good. Like way more so than you might think. They do a great job. That's just what they call barbecue in the South. Got it. Yeah, I feel like barbecue in general is a go-to, but right now it's no good. So we're gonna do board and brew. All right. So if you can tell now, I switched the scan that you guys are seeing on the screen, and I switched it from looking at things that were down 50%, and instead now I'm looking at stuff that is up 50% or more. So this is designed to help me look in contrast. And what I'm trying to do is, again, just look for opportunities. Now, what I find is a big difference for this cohort is when I'm scanning through here, I often will find things more so that look good for a continuation. Now, the thing to remember is whenever we're trading things like this, there almost always is the propensity for a reversal in the short term. So the time frames that you choose to trade matter quite a lot, because the path of those returns is going to look quite different because of it. So if I'm looking at stuff that's near highs, what I'm actually going to filter by are things that are up as a percentage more so in a shorter term time frame. So in this case, I'm looking at stuff I'm sorting by percent change over the last month. And I'm looking for things that over the last year are up a lot, but then over the past month are also up a lot, because that tends to show continuation like this. So if I look at RKT, I see very clear signs of continuation. So then a floor in RKT starts to look for something like this. Now, one of the things I like to do is try to find things before they get to that. So in this case, I'll look for some sort of consolidation. And there's a couple ways that I'll look for consolidation. Typically, I'm just looking for really tight markets within a set time frame. So something that's moving more or less sideways over a set period of time, just like this. This is like a perfect scan setup. Does exactly what I want. So then I can set alerts for things as they start to break up and out. So that's that. Cool. Let's pop through a bar chart really fast. It's stuck. So there it goes. Oh, stuck again. Maybe I'll guess where it's going to be. There we go. And I'm just going to poke through the news really fast. If there's anything else that you guys want to hit, now's a perfect time to throw that in the chat. Akshat says, 5AUG changed my whole psychology about options. I'm so hesitant to take any trades after suffering huge loss. Honestly, that's your own fault for being missized. If you're placing options trades where August 5 served as like a huge loss, I would take that as such a fantastic lesson you were able to learn on the cheap. Because what we saw on the 5th of August is nothing. Like really, it's not fun, but this is not a bad move, right? So here we closed at 532 and then we hit a low of 510. It's a 5% move. Like that's not crazy. So yeah, I feel like if a 20-point move in something that's trading for $500 really starts to rattle your cage, it tells me that you are probably grossly off sides in terms of sizing. So rather than looking at it as something that's made you like really gun shy, I would look at it as an opportunity to revisit what you're doing and make sure that you're sizing things in a way that makes sense for what makes you comfortable and what you're trying to achieve as a trader. Because that, again, is like the perfect, and this is what I've been talking about in the newsletters during those time frames. If you're not subscribed to that, especially you, Akshat, you probably should, because I talked about this while it was happening. Because if those moves caused you some sort of concern, what a great heads up to be able to get before things actually look bad. Because during that move, they really were not that bad. But if they caused really bad moves in your portfolio, it's, again, just a great heads up that we are offsides and likely really need to reconsider how we're positioned. Let's see. Oh, that's interesting that there's a union discussion. That's fascinating for Las Vegas workers at the Venetian. That's interesting. There's a yacht that sunk. That's crazy. And it's the exact kind of people you would expect to be on a yacht. A tech tycoon, a defense attorney, and Morgan Stanley. Those are the exact people that would probably be on a yacht. I don't like this. I don't like this. I don't like this. So there's nothing else in here that I really care about. So there's another, let me see if I can find it really quick. There's another really, well, I like this as a news source and I like this as a news source. Where is this one? I have to log in with my different email. Give me one sec. Log in. Let's do. Biz talk. Oh, it's kind of annoying. There we go. We're in there like swimwear. So these two I'm not affiliated with at all, but I like them. So this one is called Market Screener. I like this just because I get a chance to see kind of a dense amount of information in a small space. So I'm kind of a big fan of that. And then that's also why I like Biz Talk a lot, because it lets me crunch a lot of things down and they give you access to a lot of different sources of information. I'm not affiliated with either of these, but you can change like what data is in here and you can organize it so that stuff is kind of where you want it to be. Like, for example, I'll take a look at what kind of articles are coming out for different places, but like this, I don't care. Like, there's a lot of individual pieces of news that news providers will put out just to try to get a click, but I don't actually value the information from a trading perspective. It's actually kind of difficult to find good information. So I like this because it lets me poke through a lot of it in a really, really efficient manner. Alfonso says, I use spreadsheets a ton and have a column for turnover ratio, aka volume as a percentage of the float. It helps where there has been significant volume in a number of outstanding shares. Yeah, I think that's okay. I honestly think regular volume will do that for you because regular volume is inherently going to be relative to the percent of float. It's kind of already that, I think, because if a company has a massive float, their volume as a gross number is just going to be higher. And then if they have a lower float, their gross volume number is inherently going to be lower. But yeah, I think that that's cool. Charles says UVXY 10 delta calls, 20 EMA, crossing above the 50 is a trigger. Return 700% real money at Option Alpha Bot. I don't like that trade personally, just because I don't think it's super wise to trade things that are based on other products and not use the base product as the TA indicator. So for example, like TQQs, I'll use Qs as the tool I'm going to provide or conduct TA on, not on T triple Qs. It's a little cleaner with UVXY compared to that comparison, but it's not that different. So I would just offer that piece of information maybe to consider, that, you know, just to make sure that it aligns well with what you're trying to do. Charles says it works because it's not a full-time hedge drag. I don't get that. I was just talking about the way that you're conducting the TA using 20 and the 50. But in terms of like carrying UVXY, I mean, it will be hedge drag. I don't understand the point otherwise. So you're saying on August 9th, when we had one of the largest rallies, it only triggers 3 or 4 times a year. Yeah, so I wouldn't consider it a hedge at all. It's not a hedge then, right? Like if you're trying to trade it directionally using triggers 3 or 4 times a year. Yeah, I agree with you. So if you're saying it works because it's not a full-time hedge drag, of course, because you're trying to be super selective with when the trade's going on. So yeah, it would have saved a naked put portfolio vol. Huh? I think it's so dangerous to do that, right? So like if you have a naked put, well, naked put in what? Walk me through the example that you're talking about. Gravitaris says, is it too late to start looking at options plays going into the possible rate cuts? No, I don't think so. I actually think the market is not reacting a ton right now to the rate cuts. So to me, I think the rate cut is still a completely viable play. But I think that the market is starting to show that it values some of the other components a lot more. Just economic news on productivity, because we're not seeing the same front running that we saw previously. But yeah, Charles, for your position, Paul says the cuts are largely priced in, I think. I'm not sure. I'm actually really conflicted as to whether they are or not, because I believe if they were, we would see RUT higher. That's what I think. Because if these were priced, this is when we were originally pricing them in. So now if we're pricing them in, I would expect to see RUT a little bit better off here. So maybe they could be priced in and the market is just expecting there to be like a larger hurdle for small caps to get over. That can be the case for sure. But I just haven't fully made heads or tails of it myself, because it's bizarre that the probability of a cut is even higher than it was here. But yet we're not seeing the corresponding move that originally was driven by the probability of a cut coming up here. So I thought that was interesting. Charles says naked puts in ES, for example, in massive volatility expansion like 2 weeks ago, UVXY bot triggered a day or two before the Volmageddon weekend and returned 700% Friday and 2200% Monday. Yeah, I mean, that's cool. There's no issue with that. Again, the kind of confirms my point though, is that the trade that you get in the UVXY bot doesn't save your naked puts in ES. Your naked puts in ES still hurt. Now, to your point, in the aggregate, they might come out, but to me, the better move is just adjust the E-minis position. Right. So in this case, and you can still do the UVXY trade or the VIX trade or whatever makes you happy. But in this case, as soon as I see like a negative sloping short-term moving average that then crosses below a midterm moving average, just get out. Just be done with the product. So for me, that would get me out somewhere in here. If I'm going under the assumption that I had top ticked it, right? Playing like the worst case scenario. Just get out here. So then if you want to flip and run the UVXY trade, definitely go for it. That's super, super cool. But I didn't get a re-entry signal on something like this until well beyond getting out of the bottom here. So Charles says it was super hard to exit anything during Friday or Monday for many naked put accounts, especially in futures. I mean, that's not true, man. On Friday, when volatility was higher, you definitely had to pay up. But again, like that's the price you pay if you wait until the very last second to adjust something that's not going well. So yeah, don't disagree that it's going to be less liquid, but I completely disagree that it's hard. It's super easy. You just place the order. You're just going to take a haircut because you're exiting at the worst possible time, as compared to being, again, like just a more composed and informed trader that didn't wait until things are going terrible to try to do something about it. So yeah. Roaring says it was super hard to exit it. Oh no, sorry, wrong one. What are your thoughts on the jobs report revision? Is that affecting how people are feeling about FOMC this week? My guess is they already know. Now, the broad market, I'm unsure. I'm actually really fascinated to see if the revision comes out and what it looks like, because that will be quite a lot to tell about how many people knew about it ahead of time. But one of the things that if the revision comes out, or whether or not it's going to come out, one of the things that I've been really paying attention to is the futures market. And the futures market is not kind of reacting off sides here. So yeah, I think if it's something that retail traders are talking about, institutions have known about for a long time. And if institutions cared about it, they probably would be showing their hand via what positions they're putting on and how. So yeah, that's what I think. So do I think that there's going to be some massive impact? I don't, at least as of right now, but I don't know. I really don't know. Alfonso says, why are there a bunch of fractional shares for Q, such as 497.78 for the SEP OPEX, but not T triple Qs? That's just from a dividend. So they have to adjust the options chain. So anytime that there's a regular dividend, a special dividend, a buyback of some sort, anything that changes the value of those options over the life of the options, they'll modify them so that they represent the correct value. So that's all that is. Charles says, yeah, I think Autobot that buys UVXY on its own for its massive volatility spike is a cool, cheap insurance while away from the keyboard. I wouldn't call it insurance. Again, I just think it's dangerous to flag it that way. But of course, the one thing, again, that I would just encourage you to remember, if you think that like the key for a 700% return or a 1200% return literally lies in a 20-day MA crossing the 50 in UVXY and automating that, quite literally everybody and their mother would do that. I'm just saying. So while I'm stoked it worked in those couple of instances, you really have to think about a much more robust approach to how it would work in the long run because of that, right? Again, like if it's, think of it. If it was that simple, I would not trade anything else all year, and I would just wait for the 3 to 4 signals that you say come up in UVXY, and I would just trade those. Because if I can make 700% of my account on a single move, why wouldn't I do that? So yeah, just a thought. Charles says, yes, but a 20 EMA crossing above 50 EMA is 100% guaranteed to pick up every major volatility drop. Of course. Yeah. I mean, like when the move is happening, definitely. I agree with you. I totally agree with you. I think the point I'm trying to make is that the system as you're describing it is probably not anywhere near as robust as you seem to think it might be is all. But yeah, I agree with you. Like that EMA crossover is completely fine. If you pick 100% of every vol spike, you're going to hit the big fish, right? No, I don't necessarily agree with that. I'm not sure. I get the sense that you might be new to back testing or like looking at historic data, but I think there's a couple just big errors that I can tell that you're committing. One of them is definitely overfitting, right? Like you're looking at you're essentially saying, if I can perfectly time stuff, I can make money. Well, of course, that's very easy. So Charles says, how is a massive volatility spike, a 20 EMA crossing 50 EMA not going to trigger? Well, it's all relative. So if volatility becomes so constrained that the range is very low, then that's the example that it would trigger and it would not mean much. So for example, if you go through a really long time period where the range is very small, kind of like this time period, then it's not necessarily going to do a whole lot for you. So there can be periods in this time frame where it's hold on, this dude is completely lost. Okay, sorry. But there's not always going to be a massive volatility spike. Charles says, so the trade triggers 4 times a year. You debit 1.5% of total account value per trigger, and you hit a 700% return on capital winner once every 10 years. I mean, whatever works for you, dog. Again, I'm not saying trying to trounce your idea. If you like your idea, you like it. I'm just explaining to you a couple instances that you probably should consider, that especially the way that you're talking about it, I don't think you are. But if it works for you, it works for you. Charles says, but it's proven with real money. That's the key. Yeah. I mean, whatever makes you happy, man. I don't want to debate with you. What I see from what you've told me, because I don't know the context of what you're talking about. And to be clear, like, I fade these moves all the time myself. It's a great trade. I talked about it in VIX not too long ago. But what you've told me, from what you've told me, you've given me something that has a 2 sample size. Like, I don't care about something with a 2 sample size. I can't come up with anything from something with a 2 sample size. So yeah, if you have more to it, and I'm sure you probably do from, the back of your mind, people do that a lot of times where we're trying to communicate and somebody has a lot of contextual information that they haven't verbalized. But in these interactions, like, I'm literally just going off of what you've told me. And you've told me that you've had something that's had 2 big moves, and I'm stoked for that. But when we're testing something and like the robustness of something, we really need to consider the long-term performance of that something and the overall context behind what it can do. But yeah, I actually really like specifically the fading VIX moves personally, but trading them to the upside also, to your also point, typically will offset if somebody generally carries like a long portfolio. It can be a really attractive trade. So yeah, I'm happy. I'm happy that you have something that's working for you. That's awesome. All right, gang. It is time for me to hop off, grab some dinner. As always, pleasure hanging out. If you guys need anything, let me know. Be an outlier. I'll see you guys later.